The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So what do we got going on? A whole lot of nothing. We're out of all my short positions. And should have seen a bigger dip out here. I had some theories about maybe the market really starting to think that that all the issues with taxes and all that stuff, none of it was going to happen. Started seeing data that suggests that the president may not be as bad off as a lot of cable networks would like to think he is. And that there is a fairly good chance that a lot of that stuff's going to come along. I think the market probably would have broken with the assassination attempts, and maybe actually that if he didn't survive. So there are a few things out there that should have been able to break this market and have not. And as far as I can tell, we're going to options rollover. That's Monday and Tuesday. The next opportunity, probably up or down to catch a trend, is going to be on Wednesday. I didn't think that there's a lot of reason to go through some of the triples that we had, like we were in the SOX, in the daily. Does it make a lot of sense to just let the thing to decay for a few days? I don't think the answer is yes. Saw some other things. We'll watch Apple today, but certainly looked to me like they've been trying to get as many people short as they can today. My guess is they're going to try to run that to 145. Apple has a huge tendency. I'm either going to be wrong that it closes at 142.50 or wrong that it closes at 145. My guess is they're going to run this thing to 145 at the close. It has been an enormously long time since this has not expired within about 25 cents of a strike price. So it does give fairly good indications of them wanting to move that. So my thought is that we could see a $1.70 higher in Apple or 80 cents lower. 80 cents lower would sound reasonable, but they had all the opportunity to sell it earlier. I didn't see a lot of juice in it. My guess, it's quad witching. The thing that they do would be to run this thing to 145 and squeeze into the weekend. So that is the way I'm betting, and we'll talk about that in a minute. We'll talk about a live trade I do have on, and then we'll talk about how I'm managing that trade today and how you might. But normally I don't do last-minute options expiration plays. I'd say not normally because I haven't been able to find any in a while. I finally got, I think, a tiger by the tail, and we'll talk about starting in the trade and following it through the day. And, it's kind of tough in a newsletter to do something like this. So I'm going to talk about it kind of as we go through the show. For my subscribers, just know that I'm going to, I guess, try to make this a teachable moment. This used to be a part and parcel for traders. I guess I started doing it about 2001. It got real tough around 2010. And like I said, it's been a while, maybe 4 or 5 months since I've seen anything that even looked decent for an expiration play, and we have one, and we'll tell you the reasons why I like it, and then we'll tell you about some of the other factors involved in it, and we have foreshadowed this one in shows before. So we'll talk about it and see how the thing's going on. In the meantime, it's time to kick this party off.
That it's all just a little bit of history repeating.
It is history repeating. And what do we have going on today? In 1934, William F. Sharpe is born in Boston. He goes on to develop many of the principles of modern finance, including the capital asset pricing model, which implies a broad diversification index funds on the best blend of risk and return, beta, a measure of volatility, and the Sharpe ratio, which compares risk and reward. Sharpe shares the 1990 Nobel Prize in Economics, although I would say that he has left a nuclear weapon of mass destruction in the market. That's that CAPM model, the capital asset pricing model, which continues. Maybe it's going to be taken away with as Dodd-Frank ends up on the ash heap of history. But we will see. But one of the things it tends to do is force a lot of people to do kind of some silly things. They do it already, and it may even cause them to do less silly stuff than they normally will. But it does line a lot of people up at the wrong point. And I suspect that a great deal of what we've seen is an effort to keep volatility down. And that's so that you could raise margins so that the market could go up. And I think the Fed was happy with it. The Obama administration was happy with it. Everybody was happy with it. But like I've always said, there is the unintended consequence of these things. And a lot of times, like the housing thing, it takes 10 years for these things before they set off and blow up the markets. I think that this has the byproduct of forcing a lot of people into too high of risk, too much leverage, and we'll see. But it's always been one of the things I look out there in night and worry about, because I know this will make people use leverage far and beyond what they should, because it artificially tamps down volatility in the market. But on this day in 1934, he was bored by his mother in Boston. We were talking about a trade I had on, so we'll keep an eye out of the corner as this goes on. We've talked about Snap, and there's a few things that go together on what I like in putting together a options expiration play. Started kind of toying with this one at the close last night. Did add it during the day to it. We've talked about this one being 50% short of the available float. And I love the fact that I saw a lot of articles that just were condemning the living daylights out of Snapchat yesterday. It did do something fairly nice. Might go ahead and bring up a chart, I guess, of it. And one of the other reasons, I wouldn't hold this thing really overnight or anything else. We're going to go to break. When I come back, we're going to look at the anatomy of putting together a good expiration play and how it kind of plays out at that time. So we'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're going to continue to go on through the anatomy of a trade anyway. I picked up a few calls at the close last night, and then started actively buying this morning. It was nice enough to pull back to $17. Snapchat, where I bought the equity. My plan was on the first big push, which this did when it went through about $17.50, to go ahead and sell it and take my equity part off and leave the calls, which I bought the $17.50 calls on there. I'm in at about an average, 6.2 cents or so. So what I have now is, at least on the day, I won't lose any money, even if this thing turns against me. Trading at $17.65 right now. I suspect that it could go to $18 looking at the way that the options are structured. So that is my target. So that would give me 50 cents off of a 6.2 cent move. So not a bad day's pay if it works out. If it doesn't, I'm no worse for the wear. But many times trading and counter trading one of these during the day is a way to slowly build up a position that you can sit on your hands with and not have to worry too much. Now, one of the reasons why you have to look at $17 at being a hard line in the sand was the IPO price. If you have an IPO, the underwriters take an obligation to hold the stock price up. And that's kind of the line in the sand. I mean, a real line, not a political line. And they're going to spend at least a few days trying to hold that stock up there, even if it's just the appearance of trying to hold it up. They're not going to lose the company over it, but they will try to keep it up. Normally what they will do is get a lot of bogus discussion out there, and somebody already in the den brought it up, which is you'll start hearing the bullish case for this. But the interesting part is that you got a lottery ticket for fairly almost nothing. In my case, absolutely nothing. I'll be flat on the day whether it pans out or not. But you've got, I've got right now 6.2 cents of risk. And if it goes to 18 bucks, you get 50 cents for them. That's fine. Now, a lot of times you won't get that 50 cents for it. And that is because the option market makers, if it's close enough to the close or if they're worried about it, will just kind of stand back and never really give you that price. One of the things you can also do is force the issue. And one of those things they used to say, or I guess maybe people still say it, I'm going to put it to them. Well, that's exactly what you can do. You can force the option to go through, and that's always fun and will get you exactly what you want. There's one button I can click to force expiration on those options. Some people have to call the brokers, so you need to know just how tight in your broker is before you pull one of these things. But a lot of times, your option should be worth 50 cents. They'll give you 40 or 45 cents for it and try to screw you over for the nickel or the dime at the end of the day. We'll say if this thing does go to 18 bucks. And, it's well worth going ahead many times and just exercising that option. So you can take a lot of looks at this, but I like positions where there are a lot of people going into a weekend that have a lot of reasons to buy. This thing got jammed down yesterday. Now, my guess is there are a lot of people that went short yesterday, and now they're looking at maybe covering. So I think $18 is a good target out there. That's where I would like to sell and above. But with half the float short, a lot of times these things take on a life of their own. And we'll track this throughout the day. But I like the setup on it. There haven't been a lot of these that had good setups. And even if we go back and look at the options on this one, where's my option thingy? There it is. So let's take a quick look. SNAP. I showed this in the newsletter this morning. I mean, options are way higher for the max pain on this. So I also like that part of the option out there. Now, again, options are, maybe the chances of this paying off are 50-50. So if you're going to win, you need to get something like 18 bucks out of it. So you get, 5, 6, 7 to 1 to pay off for the times that it doesn't. But pretty good setup all the way around. Lots of shorts, very hated, going into a weekend, maybe some weak hands on the short side. You've got the option market makers behind you. You've got the underwriters for the IPO underneath you. Could this go a lot higher? I don't know. I'm going to bail out probably above 18. But you can see how if it would be nuts, I think, to be short the stock going into the weekend right now. But we'll see how it turns out. You can give me a call at 877-927-6648. Apologies to the caller at the very end of the show last night because we had some miscommunications with the engineer, and I didn't know that you were calling. So I think we've got that straightened out today. 877-927-6648. You can email me at path@tfnn.com. And you can also post a message in the den. What else do we have going on out here? Again, we were talking about Apple. Apple is one of these stocks that hugely likes to expire right on the on a strike point. So you got 142.50 and 145. It looked to me like they've been gaming this thing most of the day. It is quad witching, so you do tend to have very big movements in the last few minutes. There's some rebalancing going on, a lot of different things. Now, yesterday you were down with 31.6 million shares. That was compared to being down with 72 million shares on the 12th. So you've got this thing into lighter volume with about 50%. I would not be surprised to see a big run into the close back up to 145, and I think that could push the rest of the market a little higher. Again, I think, we probably, expire the S&Ps at, 24.35, something like that, 24.36. maybe 24.37 in that area. That's going to be the kind of the high end of resistance, resistance on the way up today. So could we get that and close a little 5 higher? I think we could. Volume is not good so far during the day. 1.555 billion shares as we start the show. So again, another good reason probably to lay off the short side for at least a handful of days. I'm not expecting a lot of volume to the upside, but I think we could get a nice spike. And that spike may come in, I think, on Wednesday. And that Wednesday may be a great time to start looking at this market short again. In the meantime, I think it's just going to flop around a bit. We don't have a lot of either news or a catalyst really to get this thing going. So we'll look at that. We'll talk about some other stuff going on. Give me a call. And that's it.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And of course, Amazon was is getting into the Whole Foods business, and if there wasn't a reason for them to be slapped with antitrust action, they just keep piling it on. Target down today, huge volume. They've got a variety of issues, including some boycotts going on for some of the people that they're supporting. This thing was kind of weak, I think, on that already. That boycott may gain steam in the coming weeks, so we shall see. Pretty easy to tick people off, and I'm pretty good at it. But it's down with sufficient volume. So not a lot other than to say about that. A lot of people were thinking maybe this was a three-gap play with this being the last gap, talking about the first one at 70 down to 67. The next one was this monster on earnings from 65 to 58. And then this last one being the last gap out here. You can make a good case for it. If Target didn't have a lot of people lining up to throw eggs at their store right now, I would probably think that maybe this would be a play. I just, it's retail. So you got to strike against yourself. You got some other problems. To me, let's take a quick look at Walmart and see if it's doing any better. It's been able to stay out of the spotlight a little bit better. Down, of course, on fairly decent volume itself today of 42.3 million shares. Excuse me. It gapped up on the 18th of May, did so on 19.1 million shares. It's through it on 42 million shares already. So you've blown that away. Again, you'd think Target maybe, or this one, can they base out? I think they can, but they're down on heavy volume. Now, why this may be the bottom for either Walmart or Target, if I see a stock come down with heavy volume, I want the thing to go sideways for at least a few weeks and preferably a few months. That's telling you that there are problems there and that most times there's not going to be a V bottom. So I just don't see a lot of reason to go into this sector. I'm fairly bearish anyway. But down on heavy volume, whether it's Target or Walmart, problematic. If you think you're going to get a V bottom, you're more likely to get a U bottom if it's not going down lower anyway. See what Amazon has to say on this. It's up higher on 8 million shares. This one's fairly interesting. As we've talked about this double repo pattern, we're getting the close back above it. Now all we need is one more close back below, and then we'll have a pattern very similar to the way Apple topped out. Now, this is above it and fairly decently above it, so it may take 2 or 3 or 4 days. That's why I suspect that Wednesday may be the first opportunity to pull the trigger short in the market again. I don't know if this thing goes up any farther because even though it's up on some decent volume, 8 million shares, you got a little bit of resistance coming back above. And I think a lot more people are thinking about the antitrust issue in Amazon. As always, I offer a warning, both long and short. Just buy puts and calls on it. Don't be playing the equity out here. The risk reward is fairly horrible for a $1,000 stock because maybe it goes up 50, but a downside target could be 200. I just don't understand why at the price, especially the price of options right now, it's just so cheap. Why take the risk? Just get a August call or an August put if you're bearish or bullish on the thing. What else do we have? To anybody emailing me? Want to look at IBM real quick and see if there's anything in that. To see if we got anything. This is 3 years. Let's go to 6 months and turn that off. You came down with a volume of 12.5 million shares on the 5th. We spiked into it with 6.5 million shares on June 12th. It's pulled back a little out here. A lot of discussion today that I see a lot of puff pieces about Watson. I have to say that IBM is at a critical juncture here. This is not some kind of slam dunk that they're going to win with Watson. This is a big, big bet. And I don't hear anybody talking about Watson. I hear a lot of people talking about Amazon's new system for machine learning. Google's really the big leader now. Microsoft's come on. I use both the Google and Amazon versions for what I'm learning. But there's not a lot of discussion out here. A lot of puff pieces about this being used in finance. But this is a very expensive option compared to the rest. And I wrote in my newsletter that came out, 30 minutes ago, that the Achilles heel of Watson may be that it was never designed to be used in the cloud. And that may be its real downfall. You can't use cheap servers. You've got to use IBM's hardware. That hardware, I think, is being replaced at an amazing rate, at an amazingly cheap rate, too. And that, again, is going to be problematic for IBM. We'll see in the next, I think this quarter is probably going to tell whether or not IBM can get a lot of people to bite. It is just, again, you're going up against Amazon and Google. And these guys mostly build for scale. And if you're a big Fortune 500 company that doesn't mind having your data out in the cloud, not a problem. If you're maybe a company, and literally IBM's focusing on these folks, and that is people that have to comply with HIPAA, which is the medical security laws, people that have to deal with security laws for finance. If you need to own your computer and keep it off the internet, there is some reasons to have IBM. They are just fairly far between, and with some decent encryption, this may actually negate all the benefits of this with IBM in the near future. So why they have some, they're not, I don't think they're going out of business. I just don't think that they have the push that they had a year ago with Watson. They really just haven't made it click the way that it should have. So what else do we have out here? Let's check back in on my trades, which are already in progress. Let's see that here. Where's it at? Oh, there we go. Okay. I need a push. Apple's pulling back a little bit. 140, 250, or 145. Looks like that's trying to gravitate to 140, 250. We're at 24.29 on the S&P cash, off 3 points. Volume continues to be vaporous at 1.6 million shares. That we got down to 24.22 would make me think that we're going to have a slight push higher out here. The advanced decline line still looks horrible. We'll talk about that when we come back. At least it did yesterday. We'll talk about that. I'm done talking for now.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hello?
Yep. You're on.
Yeah, hi. Thanks for taking my call. I just caught half of that, half of your comments there on Apple. You had a chart there, a really nice chart that showed the gaps. And if you zoom in for me, please.
Yep.
Yeah, so what's your upside target basically would be filling that higher gap there around 148?
For Apple?
Yeah, from the 9th of June.
I think I was just talking about today.
Yeah. Oh, today.
For expiration close at 145.
Yeah, but I
do
mean,
like
over the next few days. Like the option rollover, historically, there's some bouncing around Monday, Tuesday, Wednesday.
You've got a fairly good low out here, 142.51. Had 72 million shares. You went below it.
Yeah.
You closed back above it. It's kind of doing nothing out here. Maybe it pops Monday. I think you could pop before the end of the day to 145.
Yeah.
And then see, I think that down day, which is, like you said, about 149, is the top of that gap, about 147, the low part of that gap. My guess is that resistance would come in at about 147.50.
Yeah, it did a double top at 147.50 on the 13th and on the 14th. And I think also on the 2nd of May, it was around that time frame too. It did it around. So there's some resistance up there. Yeah, I would. Okay, so
I'm not a big fan of being
bounce.
I'm not. Go ahead.
You're just looking for a technical bounce here, huh? For into VIX expiration on Wednesday morning.
Yeah, I'm hoping for a bounce into Wednesday afternoon. We've got options rollover on Monday and Tuesday. Normally, they either push it down on Monday and pop it on Tuesday, or pop it on Monday and push it down on Tuesday. You get the real direction of the market on Wednesday. So normally, I try to put off any kind of big plays until Wednesday afternoon. And I think right now I'm looking at a lot of stocks. They don't have a very clear indication of either up or down. So I'm thinking maybe a couple of days of pushing up and down may get some charts that start giving some signals out here. But right now, don't see a lot of risk reward either up or down in the market, and that we're kind of sitting out here right at 2430 on the S&P, doing nothing, and the volume's kind of tells me the same kind of thing. So
I read somewhere the expected move next week for the S&Ps, the E-minis is 15.
The expected what?
The expected move in the E-minis next week, the range is 15 points.
Up and down?
Yeah.
So how did they figure that?
Geez, I saw it on the video. He was looking at the upside, 24.45 on the futures.
Okay, so he was looking. That's what I was wondering. He's looking at the futures or the options. Depends on what you look at.
Yeah, the futures, yeah.
Yeah. That's a real tough one because options generally you can figure are kind of long-term vehicles for risk management. Futures, it moves 15 up. You get a lot of people that get out of the way real quick. You know what I mean? A lot of times
June
people
28th is hello? No, has Congress extended the deadline for the debt ceiling?
I don't know if they have. I don't think it's a problem.
Really? Well, the deadline is 28th of June.
Yeah, I don't think it's a problem. They'll get it done.
Really?
I don't think. I'm seeing.
They saved Greece. They saved Greece today, didn't they?
It's just kicking the can down the road. To me, I don't see right now the bullish case actually has gained steam in the last few days of them actually being able to get maybe the tax plan and the healthcare thing through maybe by the end of the summer. So I've actually, that's why I want to kind of take a few days off and take a look at it. I don't see a lot out here. I don't see, didn't see a big bounce out of crude today. Gold's doing nothing. How many things out here are telling us that the market's gone or is kind of being flat? I need to get some signals. Without it, I kind of remember my driver's test where they said, "Hey, if you're going through a puddle and you're driving through, you really don't know how deep it is if it's still right. If there's not any wind or someone hadn't gone through it before you. If you're just looking at it, a pond can be very deep or it can be 6 inches. And right now, without any kind of movement or waves, I don't really have a sense out here. I'm going to just kind of stand back. So I think other than Apple that looks like it wants to bounce a bit before the end of the day, I don't see a lot out here that really gives me an indication one way or the other. I'm hoping that happens Monday and Tuesday.
Oh, yeah. Okay. So the critical level here is, would you say it's 142.21, or would you say it's a 140, which is there's the upper trend line when you extend it, it seems to be a critical level, 140.
I think any farther down, and you'd have a lot of people thinking an ABC down.
Yeah.
So I think this is it today. I mean, you got a good signal yesterday, half the volume, right?
Yeah.
I don't know how better it gets that there weren't a lot of sellers into yesterday. Now, could we be hit by a meteor for Monday and it go lower? There's always that possibility of a 9/11 or some kind of black swan event, but you can't ever trade living like that. So I do think that light volume test tomorrow or yesterday was kind of, maybe at least a short-term bottom. Now, if it bounces no volume, then it's probably going to come back and have some volume through the 142.
Okay. Thank you very much.
Okay.
Have a nice weekend.
You bet. You too. You can give me a call also at 877-927-6648. Okay, what else do we have going on out here? We looked at IBM, got that email taken care of. You can always email me at path@tfnn.com. Wanted me to look at the SMHs out here today to bring those up. SMH, right? You came off with a lot of volume. This one's kind of just been going sideways. I suspect a lot like some of the other ones out here. You could see this thing maybe get up maybe a few more points higher. But the down leg for the SMHs is just a couple of bucks higher. So could we kind of drift up through those on Monday and Tuesday and see no volume, maybe get to 86 or something, or 87, maybe somewhere in there, see no volume, and then the thing roll back over and really get to the destruction back down to like $79, which is kind of what I'm looking for, somewhere in that $79 to $80 range for the SMHs on a pullback. Could we see that? I think we can. But again, I think it's going to take a couple more days for these things to develop and move a little bit better. Okay, we got one segment left. Got plenty of time to give me a ring. 2430 on the S&P cash. Volume continues to be wimpy.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're looking at Disney. A horn of plenty of bad things happening to this company, from cord cutting to the numbers in the theaters being rather down. We're going into a weekend, too, where they're going to have yet another 3 bombs, fairly likely, unless there's a giant surprise. These movies are probably not going to make their cash back. I can't remember, one of them's supposed to have been a Jaws movie, and they were running around telling everybody how great it was, and I saw the reviews on Rotten Tomatoes, and not that good. No Jaws. Anyway, everybody was, they were putting the propaganda on big and hard. I saw the other 2 movies all look like they're going to, if they make their money back, it's going to be a big deal. So nothing really driving people to the theaters. The parks, they raised the rates like $20 or $30 a day down here because they were just getting too crowded, and they've probably lost them more money than they've gained, actually. So they've got that kind of on it, and of course the whole cord cutting thing out here. I'm thinking that this thing needs to get some decent news out of here. I don't know where it's going to come from because most of the things that people dislike about it, other than Star Wars, have not really turned around. IMAX has the same kind of problem. I'm thinking this one looks like it could really see lower. There's a reason why a lot of these companies, let's do this again here. A lot of these companies have very low valuations, and that is anybody in this business has a tendency to have a bunch of home runs in a row and then a bunch of strikeouts in a row. The new films that will be coming dependent on the cash coming in from the movies out here now. And I talked to a friend of mine, I think on Wednesday, he was bringing up already that a lot of the movies in production for next summer that were supposed to be blockbuster comic book style movies are all getting axed. So we're probably going to see maybe some movies that we want to go see, not just more everything blowing up movies. At least that's what I'm looking for. Haven't seen a lot. And I keep on thinking there's going to be something out there. Anyway, IMAX up a little today on no volume. I think if the numbers come through over the weekend as poorly as I suspect they will, I think this is headed back down to 2360, which is the volume day down here at June 8th, and could probably break it. There's nothing that I've seen until late August that really drags a lot of people back to the theater. I think there's one decent movie for the 4th of July weekend, and there's their tentpole strategy just doesn't seem to be working very well for the entire movie business. And this whole thing of just making one comic book movie after another, for some reason, Hollywood is stuck on working with whatever worked last summer and not whether or not they have a good movie. It's just whether or not they can get people to invest in it. People invest with what they know, and generally it's a poor bet out here. Netflix, again, Amazon in FLX tends to resist this because, of course, mostly what they do is do a pilot. They do 10 of them, and they let the best, the cream float to the top. Still kind of tough sector, but I have a feeling better than being in the theaters or in the IMAX business until maybe the better flow of movies starts coming back in. Anyway, see ya Monday. So when you can, not when you have to, and all the usual stuff.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.